Part 2, 5 truths to succeed. All the free stuff. Why so much free stuff at DTS? I've been doing this a long time, and I know myself, and I know like everybody else, everybody wants to figure it out for themselves. And you can. Generally, it's going to take a long time and cost a lot of money. But I think everybody wants to try it, you know? And I remember the day when I was trying to figure it out for myself. I remember the day that I decided, okay, I'll pay anybody anything to give me a little edge on what I'm doing here because I really don't know what I'm doing. And for me, it was the best thing I ever did. And I know people need to realize that and understand that. And I also think people should get to know the person who's going to be their mentor, if that's what I'm going to be. We may not have the same personality or style. You may not like me at all. You may not like the hilariously funny jokes that I tell in the trading room every day. But whatever it is, I think you just ought to get to know somebody. So I don't at all. I do this kind of for fun. I mean, I open the business part of it, but I don't push people to sign up or to do anything at all. If you do want to do stuff eventually, I have a long-term and a short-term letter that I put out. I have a trading room that I think is the best you'll ever be in, and I do a seminar program that is better than anything you could take anywhere for $50,000, which is what some of them cost, because they teach you what you need to know to make money in the market as a day trader, as a long-term trader. Okay, so if stock goes opposite your expectations, not flat but moves the other way, you don't take the trade. Not if that was not one of the planned entries, Joseph. Not if that was not one of the planned. Now, I do have entries sometimes where it is being taken what you would call totally against the way I want it to go, because I know I'm coming into an area, and by not waiting too long, I get such an incredible entry that I can give it what I call padding, that makes up for, more than makes up for the fact that I'm not waiting to see confirmation, if you would call it that. But right, if it doesn't do what I want it to do, though, I let it go. In other words, trading is not about what the stock, if that stock goes up to do this, and if it does down to this, the trade is winner. Generally speaking, I have a bias on a trade. In other words, my bias comes from bigger time frames, right? To me, I know some people do what they call flip stuff. I don't do that, generally speaking. There's an exception with a gapping stock. But generally speaking, if I'm looking at a daily chart, remember I said the hourly chart, Joseph, is your mother chart, right? That's what you're doing. You never trade against the hourly chart. So if the hourly chart's pointing a certain direction, there may be multiple strategies. Let's say the hourly chart's pointing down. There may be multiple strategies that you could use to get short. There may be multiple time frames you could use to get short. There may be multiple entries you could use to get short. But if it fails to go short, I'm not going to flip and go long, because that would be the tail wagging the dog, if that makes any sense. Does that make sense? You don't want the tail to wag the dog. And again, you know, that's me. I'll be the first one to tell you there's a million ways to make money. You need to find that niche, whatever it is, and you need to learn it, you need to perfect it, you need to become great at your little niche, you know, exactly whatever it is. I have a lot of people I've trained that are doing, I'm so happy when I see people sending me plans where they have this little niche and they're doing it and they're working and they're sending me the trades that they've done. Because, you know, when I take somebody on, when they're in a seminar program, you have access to me. People ask about how much is coaching. Well, coaching is part of what I want to do. If you take a seminar program with me, I'm there to make you successful. And that means you want to talk, you want to be on the phone, you want to be in a chat room. That's what we do, because I want to make sure you learn this and get it and understand it perfectly. And I get people that I'm just thrilled to see that when they get it and they're doing stuff right and they're making money, and you know, it feels good. So this talk coming up, some of you will totally agree with me with what I'm going to share with you. Likely not a lot of you. A lot of you are on the fence. Some of you will stop and think. You often had similar thoughts, but thought that you were crazy and had no one to ask. You will be curious about some of the topics and be willing to believe some of the other topics. Some of you may think I'm just crazy, but I encourage you to hear me out. What I'm presenting to you is not rocket science or learned from anywhere else. Not anything I read. It just simply comes from years and years in the trenches, studying charts and preparing for the market every trading day. Many of these topics are almost taboo to discuss as they fly in the face of what new people are frequently taught. To me, they are absolutely undeniable and provable truths. Here's the 5 things. And again, there will be some charts to back up some of this stuff. I know everybody likes to see the charts. The market is not rigged against you, but interesting topic. I want to talk about why people think it is and what you should do to use that to your advantage. The economy does not lead the market. There's no discussion about that. If you think it does, you're wrong. The study of fundamentals will never make you a penny. unless you're one in 10,000 people, and I doubt anybody listening to me is. Study of fundamentals will never make you a penny. News makes things move, but you'll never make money trying to understand the news. The smarter you are, the more you may struggle, at least initially. That's a scary one, isn't it? Because you know what? Everybody that comes to do this is probably really smart because you're able to have money, you want to manage yourself, to day trade, whatever it is. And yet, lots of smarts can hurt you in a way if you don't know how to handle it. So there's the 5 topics we're going to get into. Number 1, the market is not rigged against you. Let me read this slide. No, the market maker or specialist doesn't care about your 100 shares, not even your 5,000. Many times they don't even know it's there. No one can or would want to move a stock that trades millions of shares down XX dollars to pick up your measly stop. This is not just about day trading. If you swing trade, I bet you get taken out of your position on the morning of the second day between 9:30 and 10 o'clock. At the very least, don't use this as an excuse as to why to fail to make money. The bottom line is the most important thing on this slide to me. Because, obviously I deal with a lot of people that are coming to me for help, people that are trying and they're not doing right or whatever. And what you hear is a lot of excuses from people. Well, I'm trying to make money, but it's all rigged against me. Everything's rigged. They take my stop and then they run the stock higher. How are you supposed to do that? What's funny is I've actually had people say to me, every single trade I take, blah, blah, blah happens, and then it goes higher. Well, stop right there. You just learn technical analysis whether you know it or not, right? If every trade you take, XYZ happens, and then it goes higher, why don't you wait for XYZ to happen? Instead of having a known fact work against you, why don't you have a known fact work for you? It's something that kids in kindergarten learn to do, but yet we as adults don't do that sometimes because we're stubborn, because they think we know what we're doing. Market's not rigged against you. Yes, everyone is out to make money in their own way. Market makers do have more control. And yes, it can seem like everyone is out to get you because you get out right when you should be getting in sometimes. That ever happen to anybody? You ever get out of a trade, you look back at the end of the day, end of the week, end of the month, and you say, man, I got out of that trade literally right at the moment. Since never is in capital letters, I'm going to assume that's sarcastic. It happens all the time. And there's a reason why it happens. It's not because somebody is picking on you. Nobody knows you, right? This is only because someone is doing their job properly and you are not. Somebody is understanding how the market works, how prices work, where things are, where buyers are, where sellers are. And they're simply understanding the levels and saying, hey, you know what? If I'm going to be the guy in control of the stock, if I'm the guy that has to buy 12 million shares, if I'm the guy who's going to be the head honcho, if I'm in the driver's seat, if I'm the pilot, if I'm the big guy, guess what? I'm not going to make it easy for everyone else to tag on my shoes, to ride my shoes, to tag on my heels. What am I trying to say? What's the expression I'm missing? To ride my coattails. I'm not going to make it easy for people to ride my coattails because you know what? People riding my coattails cost me some money. So let me go over how this works exactly. Think about it. You have 5 million shares of stock to buy as some market player, okay? You get the call, some hedge fund calls and says, here's this stock. It only trades 2 million shares a day and I need 5 million shares by Thursday. What do? And again, understand something. I've never been a market maker. I didn't tell you this part of my background. When I started trading, I had zero market experience. I mean zero. I mean, I would challenge anyone in this room listening to me that I had less than you do or did. I had zero. So this is very learnable. But when I tell you this stuff, I'm telling you from the fact that I trained 2 market makers, so I had long discussions with them about a lot of this stuff, and from what I see on charts all the time. But how do you go to buy 5 million shares? How do you do it effectively? How do you allow others to help you? What do I mean by that, allow others to help? Well, let's say a stock's trading at $22. I don't think I can write on the screen in this setup here, but let's say a stock's trading at $22. And it trades a couple million shares a day, and I need to buy 5 million shares over the next 2 to 3 days. Am I going to affect the price of that stock? Am I going to affect the price of that stock? Will I? You betcha. There's no way to avoid it. I don't care how good I am. I can't avoid it. But here's what I'm going to be. Here's what my livelihood depends on. Here's what my job depends on. When I turn that stock over to my client, which started at $22, it better come in at an average price of, I don't know, $23. I don't know what the number would be. But if I turn it over to them at $25 and then a week later it's back to 22, guess what? I'm going to get fired. So I need to be good at buying that stock, but yet not running the price up. That's what the job of a lot of market maker specialists is to do. Do you understand where I'm going here? They're not out to screw you. They're not out to say, hey, what can I do to make this guy's life terrible? But you know what they have gotten to learn? They've gotten to learn that the average Mickey Mouse trader, and excuse me for using that language, but the average, go to the internet and read Technical Analysis 101, you're all going to put your stop where, everybody? Where's everybody going to put their stop? In the same damn place, right? You're all taught to use this area of the chart because it goes below this area of the chart. Well, that means that everybody's going to be selling it. Well, that's not how it works. That's not how the marketplace works at all. Look at charts. Don't look at what you're told. Look at what actually happens. If you have a bullish, bigger pattern as a day trader, the hourly chart, as a long-term trader, the weekly or monthly, if you have a bullish hourly pattern, most of the time, small time frame weakness, smaller, is an opportunity for you to enter with the people who are looking to buy the stock, not be taken out. What I teach specifically accentuates this and capitalizes on it. Never ever should you be taken out of a trade at the moment you should be getting in. Never should that happen to you. Now, anything can happen, but I mean it should be an extremely rare event because you screwed up. So what'll happen is if a market maker has to buy something, they'll initially pop that stock. They'll get as much as they can while everybody's sleeping, right? And that's why sometimes you see this big move, this big, what you call a breakout, a big green bar forms. And then guess what they do? Everybody, after they, let's say they get one of their 5 million shares they have to get, just bam, 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 and they run the price up 50, 60, 75 cents. What do they do then? Yeah, well, they're not necessarily going to sell, but they sit back. They let all the wannabe traders play with themselves. In other words, it's come back to this level. Here's a Fibonacci level. Here's a Gann level. Here's this, here's that. And traders come in and start buying, and then guess what? Without the big money there to buy it, nobody's buying it. So all these traders that are buying, it pops a little bit, and then it sells off, then it sells off. And then these areas come where, anybody can look and say, oh, okay, everybody probably is their stop right there. So let's just let it go through that stop. When it goes through that stop, guess what? Everybody sells because that's their stop, and guess who steps in to keep buying? The person who wants to buy all the shares. And that's why it's not just this weird coincidence that you end up getting out when you should be getting in. It's designed that way. And I don't mean designed like anything's rigged. It's just the game that you're playing. You're here to play a game. It's just like if you're playing a football game against somebody and they do a quarterback sneak. You're saying, oh, wait a minute, this game is rigged against us. We didn't know he had the ball. Well, no, that's part of the game. It's something you have to know and understand and do and capitalize on. So, no, nothing's rigged against you. Let me give you just an example from, and again, when I show you trade examples, I want them to be from the last couple days. I don't want to go back 13 years to show an example to you. This is from yesterday, and this is AVY8. I don't care that much about the strategy, but I did want to show you what it was. This is a stock that the prior day had gapped in a bullish way. So you see this chart here. This is captured today. So this is today. This is yesterday when I traded it. This is the day before when it gapped. This was a relatively bullish gap. Okay, so the gap was what gave this what I call the picture of power, a reason that I should be looking to trade this. It gave me the confidence to trade it. But it was on day 2, this day right here, when I traded it. Let's go down and take a look. Do I have the right chart here? Where am I? There we go. So this is day 2, 5-minute chart. In other words, I'm talking about, see right there it closed there, and then it opened this next day. So it opened right about where it closed. So I'm talking about now looking at traded this next day because it was on my screen, had it, and I get this setup in here, right? So here's a nice setup. Boom, you can see the numbers down here. This is a play I did with the room, about 10:45. This little thing sets up. Now, do I care about this quote-unquote breakout normally? No, not really. I need to have some picture of power behind it. That's why a lot of breakouts don't work. This did. It had this gap. It had a support level from the prior day, blah, 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 blah. So I go to play that, and boom, getting in because I trust this type of a play, getting in very tight right at the top of the base, over 1861. And boom, I get in, and the thing pops up. Great. This is what I call free money. Take half of it off the trade. You can see it down here. I took a third of it off the trade, just about at 11 o'clock, just right off the high. So good sell. Nice job, Paul. But I'm still holding the back two-thirds because I'm thinking this is going to go even higher. What would most people do right here? When this thing starts moving up right here, what do most people do? What does everybody do is in this trade? They all put their stop to right there, right? Right there. I don't know. Because what I say is, you know what, somebody's going to test that stop. They want to run that stop and see what they can get, and that's what happens. So boom, you can see the people pile out of this, right? The person who's buying it buys a little bit, then backs away. Buys a little bit more, backs away. Boom, comes in and pounds it again, right? And backs away, and then runs it into the close. So I had the rest of my shares, right into the close. I trailed them out just before close right in there. Right? Now, it ended up, I never got any higher than my first target, but I had that opportunity. And this is a typical type of chart where, now this is an example here of not stopping out of a bad trade, but rather trailing a good trade, but it's the same concept. Where do you put that? Where do you trail it? You don't go by this initial thing. You wait until you see the knee-jerk reaction to that happening, and then you react to that. If you pick good patterns, this will make you a ton of money. Now, if you're picking bad patterns, ones that aren't going higher anyhow, well, this will just cost you more money because they're going to fall eventually anyhow. Does that make sense, everybody? Number two, the rest of these are going to go a little bit quicker here. Makes too much sense. 5 truths to succeed. Number two, what are you looking at? The economy does not lead the market. Thanks. Economy does not lead the market. There are two categories of people here. Why is this important? Well, I'll tell you why it's important. Because you either look at the right things or you don't. You either learn to look at the right things or you don't. If your head is filled with all the wrong things, you can't ever learn to look at the right things. That's just all there is to it. Okay? A lot of people will kind of agree with me, but yet they read every economic report, and it influences them. They start to say, oh my gosh, I can't go long today. The employment numbers are off 0.2% this week. What's going to happen? Blah, 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 and it influences you in a negative way. Can't do that. You just can't do that. The economy simply does not lead the market, period. I don't even want to take a survey. I don't even want to entertain the debate about whether you think it does or not. I don't really care. It simply does not. It is uncontrovertible. Now, in some abstract way, the United States is a good economy. It's strong. The market, of course, there's some abstract connection. But what I'm saying is trying to pin down that connection on a day-to-day or a week-to-week or a month-to-month basis will have you losing money all the time, guaranteed. Okay? If you agree with me, then why are you looking at all those reports? Now, hey, I like listening to the news like any normal person, I like getting, 10 minutes of news in the morning at the end of the day and blah, blah, blah. And, somebody says, oh, well, this report came out today and things are looking good, things are looking bad. But that has zero, and I mean 0.00 effect on what I do as a trader, long or short term, it doesn't matter. There are not different rules for long-term traders. I know one of the problems is that everybody, being a technical trader, I think a lot of people, here's what I will ask you. If you're a technical trader only, do you almost feel guilty sometimes? Or do you almost feel like you're not working hard enough, like, gee, I should be doing something else? It's a common thing I run across. And you can't feel that way. You can't do that. All that matters is the bottom line. See, all this economic stuff, all the news, all that stuff, your interpretation doesn't matter at all. Nobody cares about your interpretation. And you know what? You're smart, but you're not smarter than the collective effect of 220 million other people who are trading the market. What we want to see is not what you think about the news of the economic data. We want to see where prices go as a result of that. That's all we care about. If you want just some general, just big sweeping comments that prove this without even having to think about it, things that somebody, again, an 8-year-old kid would understand this. 2008 to 2016, economic measures of the economy, if you look at it objectively, some of the worst economic things we've ever had in this country. Lowest GDP growth ever. First time we went that many quarters without 3% GDP growth. The lowest labor workforce in 2 or 3 decades. Most people getting government assistance in ever. I don't want any political. There's nothing to do with politics. It just has to do, period. That's what the stats were. What did the market do during that time? It quadrupled. It quadrupled during a time where nobody could make any argument that we had a good economy going on. How does that happen? Well, I know why it happened. Yeah. Well, it fell before that, blah, blah. Okay, well, again, in other words, if you're saying it fell before that and puked out, well, then you're looking at a chart. Stop looking at the economy. What caused, did the Great Depression cause the stock market crash of 1929? Or did the stock market crash of 1929 cause the Great Depression? I don't even need to answer that question. Same thing with any other big debacle we had. The crash of 2000, crash of 2008 were not because we had a bad economy. It was the opposite. It was because we had such a euphoric economy that the market crumbled under its, to quote Greenspan, exuberance, over-exuberance, right? Guess what? You see that on a chart. You don't see that in numbers. Sure, it eventually matters in some abstract way, but the market is the greatest forward-looking discount mechanism there is in the world. What do I mean by that? I mean, whenever something comes out, the problem always is you don't know if the market's absorbed it already. Take a look at news. Take a look at terrorism. Does terrorism affect the market anymore? Zero. Some amount of terrorism would. I always said if there's a big mushroom cloud over Washington, D.C. one of these mornings, I think we'd see a big reaction in the stock market. But the normal, I don't mean to belittle it, but the normal 50, 70 people killed here, killed there, the market doesn't even acknowledge it anymore. Would it have acknowledged it 20 years ago? Yeah, it would have. So it absorbs and it expects. There's a certain amount of everything built into the market already. There's a certain amount of terrorism built in the market. There's a certain amount of bad news that's built in the market. All this stuff. When I get into, am I going to do this? I forgot what I put in here. The market is the greatest discount mechanism around. Employment, okay, the employment rate drops 0.5. Let's say tomorrow, let's say this Friday, the employment rate drops 0.5%. Give me your answer. Is that good or bad for the market? Is that good or bad for the market? Is it good or bad for the economy? If the employment rate drops 0.5%, will that be good or bad for the market? Seriously, think about it. Give me an answer. If you don't know the answer, well then my first thing to you is, again, if you listen to these numbers as a basis for your decision to be in long or short-term trades, and my question to you is, why are you listening? And the point is, you can't tell. Let me tell you exactly what will happen. If the employment rate drops, and for whatever reason the stock market rallies, here is what you will hear on the news that night. Market rallied today over euphoria about employment rates going to the lowest rate in 3 decades, right? That'll be the news. But what if the market decided to drop? In other words, if we actually had that news Friday, I guarantee you the market would drop. Why? Because the charts say the market is looking for an excuse to drop. There's money that needs to come out, even if it's just profit taking. There's profits that are going to come out one of these days. It'll come out as a result of some news item, but the news item won't be what caused it. The news item will not be what caused it. And by the way, I'm thinking about it. If you go to that free stuff page, down at the very bottom, there's an article called Listening to All the Wrong Things. I think you will enjoy that article more than anything I've ever written. I talk so much about this topic that I finally decided, I took a long time to write that article, like probably, for me, a long time, 2 or 3 hours. And it was the ultimate article for me to explain this topic about news and everything. But what will happen is, if the market drops on that same good news, what will the news story be? It'll be unemployment rates have reached a point so low that there are not enough people to fill the job market, and the fear is that wages will rise, sparking inflation and more interest rate hikes, which will kill the market. The market dropped in response to this. Isn't that exactly what happens, though, everybody? Right, Derek, exactly. Yeah, I mean, you got it totally. So I'm not even talking to you. I'm talking to anybody else who doesn't get this. The market does what it does, and then at the end of the day, Forgive me, I forgot what slides it. And then at the end of the day, people come in to justify it, right? And they have to pick. And this is what's so deceptive about this is that to the average person, think about it. You're being told, here's why the market dropped because of this news story. And you go, oh my gosh, if I want to understand the market, I better pay attention to the economic report, to the book-to-bill ratio, to GDP numbers, whatever it is, because that's what the news reporter, in other words, the market goes up, the news reporter has to look on their desk and say, give me a good story today to justify the market going up. So they pick this story, right? Cat rescued out of a tree on Elm Street. That's why the market went up. Okay, I better look out for cats on Elm Street. That's what makes the market go up because that's what we're told made the market go up. But if the market had gone down, the news reporter would have said, okay, give me the bad story today. What was the bad story? Oh, well, unemployment rates went down. Oh, that's a bad story? Well, people are afraid of inflation. Okay, there's the bad story. So people get this thing, not fake news, it's real news, but it's being told to you in a way that you think that's what's moving the market because they have to justify it. Hard to explain if you don't get it, but again, economic data, news, we don't care what is said, we care how it is responded to. This one cracked me up, and here's an exact example of what I was just saying. Really bad, back when the trade wars were going on and, Trump did something and news reports came out, this is bad, this is terrible, this is going to end our economy and, we're all going to be living in tents very soon. It was bad news, and the market initially reacted bad. So everybody was very quick to say this is bad news. What was funny was, at the end of the day, the bad news was that little tail. It came out in the morning, and boom, the market dropped, and then it rallied for the next 3, 4, 5 days. So the news reporters had a real problem because the only news story that day was a very bad news story. They couldn't deny that, and yet the market went up. So what did they say? You know what they said? They came back to say that the numbers the prior Friday, the job numbers were so good that carried over to the following Monday. I mean, just make up whatever you need to justify what's going on. So the economy does not lead the market. We do not care. The study of fundamentals will never make you a penny. And here's a sensitive topic for some people because it's the same concept. In some broad, abstract way, somehow good companies make money, have good stock prices. Absolutely. But if you think you're going to go today and make money by understanding a company's fundamentals, you will lose all the time. First of all, let me remind you that if you want more of a discussion on this, I do a class called Introduction to Mastering Technical Analysis, and I invite all the members of DTS to come to that. It doesn't cost anything. It's the first half of the actual paid for class, but I invite people to come. And we explore this concept in more detail about what actually makes prices move. But let me give you a quick little excerpt from that very quickly. And I know for some of you, you say, oh, I know fundamentals, I don't look at them. But yet, a lot of people say that, but they're kind of closet fundamentalists, and they still do, and they still think about it, and they listen to news. And let me give you this quick little analogy here just to see if it gets the point across. Because I used to talk a lot about different ways to, kind of put down fundamentals, if you will. And instead, I came across with this concept, and that was this. If you're a fundamental trader, you are looking at earnings reports, the profit loss statements, the books of a company, the management of a company, the balance sheet of a company, the industry the company's in, the competition, right? That's the stuff you're looking at as a fundamental trader. If you disagree with me, let me know. So let's say right now I want to look at semantic, and I want to decide if I want to go long or short semantic. So I do my fundamental analysis. Semantic is currently trading at 23.89 right now. All right. So I go on the internet. And the internet, by the way, is a special piece of software that only I have. I got this download the other day, and I was told nobody else has it but me. So I go on the internet, and I go out to a website, and I go to Semantic, and I find out the balance sheet for Semantic, and I look at what it is today and yesterday and last week. I look at the profit and loss statement for Semantic last quarter, prior quarter, last year, and what's projected for next quarter. I look at the management of Semantic. I look at the competition for Semantic. I look at the book value of Semantic, if it had to sell all of its assets. I look at all of this stuff, and I decide that Semantic is actually worth $24.50, which means that it is currently undervalued 61 cents. So I will go long semantic until the rest of the world understands how undervalued it is. Isn't that exactly what a fundamental trader does? And I don't mean, I know the way I did it, it sounds like I'm being sarcastic, but I am. But you can't argue with it. That's what a fundamental trader does. If I was having a debate with a fundamental trader, they could do nothing but shrug their shoulders and go, yeah, that's what I do. But yet, when you listen to that, it sounds ridiculous. And it is ridiculous. Now, there's 1 in 10,000 people that are unique. I actually knew a person who knew a person who was a forensic accountant and could actually understand things to look at that nobody else would, and actually was successful in attacking and shorting companies based on his very unique understanding. And I'm talking only 1 in 1,000 accountants would have this ability. If you're one of those people, that's great. I doubt you're listening to me. But I'm not one of those people, and I doubt any of you are. And if you are not, then going on the internet to look at numbers that everyone else has looked at is not going to help you. Another great one, Kramer. I put like Jim Kramer, not Cosmo Kramer from Seinfeld. Jim Kramer, smartest guy in the world when it comes to fundamentals, right? He could probably tell you the P ratio of any stock. He could tell you the wife's name of any CEO and probably her birthday of any CEO on Wall Street. And yet he, and again, forgive me, I haven't looked in a few years, but all of his recommendations he does on fundamentals, he's losing money. If you go, there's people that track him. I don't track him. I haven't even heard his voice in years. But if you go look it up, his recommendations lose money. And you'll never be as good as Kramer at fundamentals. Okay? So again, that's item number 3 or 4. That was not item number 4 about 5 truths. And these are things you need to accept. And of course, the bottom line is coming down to that it's only technical analysis that matters, because this is the sum event of all. This is the sum endpoint of all of this discussion. News, this news makes things move. I'm going to go over this rather quickly because I kind of really did this already before. I really did this. I did this already. I did it as part of the economy. So here's that article. If you go to the free page down the very, very bottom, listening to or studying all the wrong things. Read that over. I think you'll enjoy it. I did news. I'm going to move on. Here's the last one that I want to spend the last 5, 6, 7 minutes discussing with you. And again, it's a psychological thing to some extent. The smarter you are, the more you may struggle, at least initially. Why is that? Whoops. Well, it's because the market is very unique. Some of your best traits may be hurting you. Here's the topics. You are very smart and you've been successful. Question, how much does that help you in trading? And then you have to fill in the blank there. Sure it does, but what? Let's go over some of this real quick. All your best traits may be hurting you. You got here, you got in a position, if you're listening to me, you either have the time to day trade or you have the money that you want to manage it yourself. You want to know what to do to how to make more money out of your money. That probably puts you more successful than 95% of the people in the world. That's great. Congratulations. You got here by being smart. But unfortunately, from here forward, all of those traits that you use to get here don't help you. And most of you probably realize this already. Most of you, are probably like, nobody said this to me before, but I understand what you're saying is true, because these traits that you have, most of you people here, including me, you probably have the attitude of, roll up your sleeves, work harder, make it work. If somebody else can't do it right, I'll take over and get it done right. I'll get the job done no matter what. And you know what? When it comes to trading, that doesn't work. It's truly one of those rare times where working smarter, working harder, there's a big difference. Doing all the wrong things and doing them twice as fast and twice as often does not make you more money. Unfortunately, some of your great traits could really be hurting you. I talk about doctors. And I used to mentor people a long time ago. I privately mentored 99 people. Stopped one short of 100. I don't know why. And 3 of them were doctors. And doctors have this reputation. You know what? It turned out to be 100% true. Doctors do not like taking stops, because a doctor is taught to do anything possible to save the patient. And I know this sounds abstract, but it really carries through into their personal life. They're taught to do anything to save the patient. Somebody comes into the emergency room, and it's almost for sure they're going to die. The doctor doesn't care. He pulls out the big electrical zappers and gets the rib cutters and whatever else doctors get, and spends, $50,000 or whatever it is in a half hour to try and save this patient, because that's what he does. But as a trader, guess what? How is that for an attitude as a trader? I need a sip of my beverage here. How does that work as an attitude for a trader? If you're a trader, is that a good attitude to have? Spend anything you can to save the patient? Does that work? Now, if we were to take that analogy and say, let's take a trader and make them a good doctor. If somebody walked into the doctor's office with complaining of a headache, the doctor, who was a good trader, would shoot the person in the head because a bullet costs 22 cents and an aspirin costs 50 cents. Right? I mean, that's the analysis we make as traders. We don't care about stocks. We're not partial to them. We don't like or love any of them. Either work for me, do the job right, or you're fired. Right? Hey, James. So no, doctors are notoriously that way. They want to keep buying more shares of a losing trade to help save the trade, to help pull it off the ground and hope it bounces enough they can keep the trade alive. Bad attitude. Lawyers. A lawyer goes into court and he's defending a guy who just ran over an elderly woman in a wheelchair. And there were 32 nuns witnessing the whole event. And what does the lawyer do? Well, the lawyer takes the best approach he can. He says, well, my client, it's not really his fault. He was on drugs at the time, and he was on drugs because his father had been beating him, and he grew up in this terrible neighborhood, and blah, blah, blah. What the lawyer is doing is justifying. He's trying to take a bad situation and make it okay. And again, as a trader, what a terrible trade to have. I take a day trade on a 15-minute chart, and it stops out. I go, well, you know what? It's still above yesterday's low. Let me hang on to this trade because I think it's still a good trade based on that hourly chart. And then it keeps going lower. And I say, well, you know what? The daily chart's still in an uptrend. I'll just hang on to this chart until the daily chart's not working for me anymore. And then when the daily chart doesn't work, they say, you know what? This company just had great earnings a week ago. I'm just going to hang on to the stock forever. They keep justifying their bad position. Instead of sticking with the reason for which they got into the trade, they start changing the rationale in order to justify being in it. And these are subconscious things that carry through to people. Quick question for you in the last couple of minutes here. If I had, that's right, Derek, you're exactly right. And this last part may shock you, and it's something that years ago I was actually even prohibited from saying, but now that I have my own company, I try and help people and tell them what's needed because I don't care if you like what I have to say or not. But if my life depended on training somebody to be a successful trader and I had 30 days to do it, what profession? Who would I trade? Who would I train? Who would I train? Male, female, age, occupation. Who would I want to train? The female executive of a big company, a male stockbroker. Yeah, actually, I mean, typically females are a little better in learning than males because of the testosterone issue, but that's a small thing. What I would actually, and Mark's heard me talk before, what I would actually like to train would be a video game player. A 15-year-old video game player is who I would like to teach to trade the market because, number one, they have no preconceived notion. Number two, a video game player, when they die in the game, you know what they do? They do two things. And listen to this. You think some of you think I'm crazy at this point, but they do two things. Number one, they hit the reset button, and mentally they are 100% back in the game. And number two, you know what else they do? They learn from their mistakes. I was a bad parent probably. My kids were playing one of the shoot-up games. Well, World of Warcraft, is that what it's called? They were playing at too young of an age. My attitude was I didn't care. But you know what was interesting when I watched them play? They would take the thing out of the box. They wouldn't, this would drive me crazy because I'm a big, I got to read the instructions to everything or I think I'm missing something. They would take the game out of the box. They would throw the box away, throw the instructions away. They'd put it in the computer. They'd skip all the instructions, boom, boom, and they'd be playing in 22 seconds. And you know what they would do? They get killed. But you know what they did every time they got killed and they hit the reset button? What did they do? Every single time, even at 8 years old, what did they do that adults for some reason can't do? What did they do? They get killed, they hit the reset button. What do? They learn from their mistake. They learn what they did wrong. Boom, they get past the next level. Boom, they learn from, and they keep learning and learning and learning. And that's all we have to do as traders. If I had a nickel for every time somebody said to me, I've done this trade 27 times now, and every time it stops out, and after it stops out, it goes to the high of the day. Well, do you really need to email me? Do you really need me to answer that question? If you have something that happens 27 times in a row, can't you learn to make money from that? But yet we don't. Trading investing is best treated as a video game. Look at the screen in front of you. Understand and analyze that those price bars in front of you are incorporating everything that's going on, including games being rigged against you, including market maker fake outs, including HFTs, including the economic and data in the news. All that stuff is in that price bar in front of you, and you need to learn how to read that. That's absolutely positively the best way. Are there any questions? I can't believe that I finished this like just 2 minutes on schedule. To me, I'm not very good at doing that normally, but for some reason I did. I thank you all for putting up with me during this time. Again, if you have any interest to try to get better, if you need to at all, in learning to trade equities, the market, Forex, on any time frame, from a 1-minute chart up to a monthly chart, come by and check out DTS. Absorb all the free stuff there. If you like what you hear in me, and you're so inclined, usually a small investment to make yourself better is the smartest thing you can do if you think you need it. All right?